wrapping up here. Let's see. Got it. Okay. So YouTube is live. Good. That's working. Excellent connection. Let's see. Facebook is about to come on live. Thank you for your patience as we get all of this started. Perfect. Awesome. LinkedIn is live. LinkedIn has been kind of funny. I posted something earlier on LinkedIn and it really didn't work out how I thought it was going to work out, but that's part of the learning curve. So just make sure that the Facebook started as well. Awesome. Cool. Great. All right, let me just pull up the chat here as we get started. So today we are going to be talking about, again, living rent-free forever and buying that duplex, threeplex, fourplex in order to live rent-free forever. But since we're in tax season, I kind of wanted to talk about taxes. And if you have not filed your taxes already, we'll go over a few things that you might want to consider, just so you're aware of it. So, okay, that's live. All right. So let's go ahead and get this baby started so we can get right into the content. Let me try to pull up the chat overlay. For some reason, this hasn't been working. So if you want to message me, send me a direct message afterwards so that way I can answer your questions. I know a lot of people have been direct messaging me. Of course, if you're on YouTube, you go to my About section, you could see me there. Instagram, I've gotten a lot of direct messages. So for some reason, the chat application here hasn't really been that friendly. So anyways, I want to interact with you. I want to know what your troubles are. I want to know what the points are. Again, as I've shared some of my story in the past, really I got started with this back in 2011, where my wife and I, we bought our first fourplex property. We lived in one of the units completely free. The tenants paid our rent. The tenants paid for our mortgage. And then, I got into entrepreneurship, construction, et cetera, et cetera. And now I'm just sharing the mistakes that I've made and hoping that you could learn from this and avoid some of those mistakes and ultimately get the result that is going to work for you. So, let's get, first of all, let me give you just a quick overview of what it is that we're going to go through today. I do have some notes that I want to go over, so you kind of understand how I structure this. So the first part, we're going to be talking about taxes. Taxes from the point of view of filing your actual taxes, right? Every single year, every person in the United States, you have to file a tax return to report what it is that you earn, and that we're going to get into some of that. The second part of that is going to be kind of reverse engineering the process. And what I mean by reverse engineering is once you know the end result of what you're headed, what are the step-by-step things that you have to take in order to make it happen, right? So that's what I mean by reverse engineering. And then the last part of this, we're going to be talking about the team that you need to have around you in order to, I guess the quote isn't to succeed, but in order to get the result of what you're looking for. So, okay. So again, the basis is, wherever you are right now, it doesn't matter if you're just working or whatever. It doesn't matter if you graduate from college. It doesn't matter if you're 50 years old and you're supporting a family or whatever it is that you're doing. The basis for everything that I've been showing you over the last few weeks is how to live rent-free forever. And again, a lot of it is a mindset change. When you look at your paycheck and you've been working the same job for 1 year, 4 years, 10 years, 20 years, and you're always behind that 8 ball, right? And what I mean by that is every single time you get paid, you just have enough, just over broke, just have enough to pay all of your bills and then some left over to go out and maybe have dinner a couple nights a week or go on vacation a couple nights, whatever, right? So the first premise is you want to break out of that. So if you're somebody that wants to break out of that, this video is for you. Now, you might be in a position where maybe you're a little bit more advanced. Some of the stuff that I'll talk about here are kind of the fundamentals, which is good to go over because sometimes if you're a small business owner, if you're an entrepreneur, if you have companies, you know what I'm talking about. Sometimes a lot of people like to write a lot of things off and they're not thinking about the consequences. Sure, they're paying little or zero in taxes, but there's other secondhand consequences that are coming into that. So this video will apply for you. And ultimately, again, the goal is for you to really, not have to stress or worry about that mortgage payment or about that rent payment, which then will allow you to, maybe free up your time to, go and further develop your career or start your own business or do something that you've always wanted to do, but because of time, because of finances, you've always been tied to the job or that secure method of earning income and you have no other investment. And for some people, again, this is just as simple as, hey, I'm just a working Joe. I want to have a property that I own. This is my nest egg. I want to live rent free forever, so I don't have to worry about that. And that's just what I want. I don't want much more in life. I don't want to start my own business. I don't want to have a whole bunch of responsibilities, and that's fine, right? If you're in one of those categories that I just said, this video is going to be for you. So, taxes. So, some people that I've followed and I've learned from, as well as some people that are also in business, they always have this saying, right? You want to pay the least amount of taxes possible, right? And sure, that's a great saying if, you're making multi-million dollars and you have cash flow and you have all of that stuff. You want to reduce the taxes as much as possible. But what's the end goal? The end goal for you in the situation that you are in right now is that you're probably paying rent. You're probably working a job where you have to wait every year for that little 50 cent or $1 increase. You're probably making an hourly wage. You probably, don't have a lot of investments. You might not have a 401k. You might not have an IRA. You might not have a retirement account. You just don't really own anything right now, right? You're just going day by day, working in order to pay those bills and, just kind of trying to get out of that hole or get to a better situation, whatever that situation is like for you, right? So when tax time comes, if you've been working at a job, what you do, and again, I want to make this very, very basic. I'm not a tax professional. I actually married, my wife has a master's degree in taxation, so she's the tax expert. And, she, from what I'm aware, she does have one or two more spots to take on clients, but she's very, very specific with the type of people that she works with. So again, I overhear a lot of these conversations, and just in my experience, filing taxes since I think the first time I filed taxes, I was either 16 or 17. So I wasn't 18 yet. It was prior to my 18th birthday. But I think I filed with my parents' tax return or however that works out. But again, ever since I turned the working age of 18 or whatever you call it, where I could file taxes on my own as an individual, I filed taxes. So after 17 years of filing taxes, having a job, having multiple businesses, and again, growing and scaling different things and looking at it from multiple things as I scale and as I've tried to maneuver around this world, if you will, of finances, I've, figured some things out of what has worked and what has not worked. So if right now, if you are working a job, okay, so let's start off here. You're working a job. Every time that you get paid, your employer, right, pays you the money. And out of your paycheck, you see all of those things that come out: Social Security, unemployment, federal taxes, state income taxes, all of that stuff. You see all of that coming out of your paycheck, right? And part of that you pay, and part of that your employer pays, right? So that's just how it works. Now, let's say you started working in January and you ended working in December. Throughout all of those months, January, February, March, all the way up to December, every time that you pay, what you're doing is you're putting your money and you're giving it to the government and saying, hey, Mr. Government, hey, Mr. IRS, hey, Mr. State of Massachusetts, here you go, hold on to this money because in January, right, when I started working, when I got my job in January, I estimated that I was going to make $50,000. So based on that 50, or and it doesn't matter whatever the number is for you. It could be 50,000, it could be 100,000, could be 150,000. Now again, this is for individuals that have a regular job, a W-2 income where they get paid every single week or bi-weekly, however your employer pays you, right? So again, on January 1st, you say, hey, Mr. Government, this year I've estimated that I'm going to make $50,000, $100,000, whatever that is. And based on that, in the bracket, in the tax bracket, and according to all the laws and the structures, which the IRS and the state governments have, right? Again, I'm not a tax expert. There's an estimated amount, again, remember this, estimated amount of taxes that you are going to pay. So let's say you made $100,000, you were in the 20% tax bracket, you're approximately going to pay $20,000 in taxes, right? Makes sense. Very simple. I'm trying to make it as simple as possible. So, and again, there's a million variations of this stuff. There's a million scenarios. Everyone is different. So every single month, you're paying towards that $20,000 tax bill that you are going to be due next April 15th, right? You work January to December. Next April 15th, you have to file taxes. And by April 15th, you have to pay the government whatever you owe them, or they got to give you a refund based on your filing. So things come around, or whatever the scenario is. You made $100,000. You got to that position, made $50,000, and now you're about to file your taxes. And now you're saying, okay, Mr. Accountant, whether you go to an accountant, whether you go to H&R Block, whether you go to some other CPA, whether you go to the place that your parents go to, right? Their job is going to be to collect all of this documentation from you that you can provide, your W-2, your your health insurance, if you own a business. No, again, let's stick to the employees. To the employees, they're going to collect all of this information, right? And then they're going to say, well, Mr. Employee, based on everything that you did on the W-2 form, it shows here that your gross wages, now gross is the amount that you got paid, whether it's a salary, whether it's hourly, that's the amount. Whenever you get hired and say, we're going to pay you $20 an hour, $25 an hour, let's just say 40 hours a week is $1,000 times 52 weeks, $52,000. That's the gross amount. So that will show up there, right? And then you'll have all of the expenses, if you will. Now, I want you to remember and start getting familiar with this, because as you own real estate, you'll actually think about this stuff a little bit different, right? So the taxes are an actual expense that you as an individual have, right? You don't just go out and work and earn $100,000 and take it home free and clear. You actually have an expense towards earning that, right? So those expenses, part of that is taxes. So now you have this paperwork that says that, and now all of a sudden you see, hey, you actually, you didn't make $100,000. You only made $90,000 because you had a health issue, or you took some extra vacation time off, or whatever the scenario was, right? So, but you've actually prepaid $20,000, but you only owe 18, and now you get this nice refund of $2,000. Well, whatever. Or maybe if you have children, you get a child tax credit. Maybe if you're going to school, you get the education credit. If you made up to a certain amount, I know there's the earned income. There's a million different credits. Again, I'm not the expert on this stuff. I know enough about it to discuss it. But again, your tax professional will be able to tell you exactly what it is, right? So again, now when you file your taxes, you're either going to get a refund based on the amount that you overpaid when you paid all those taxes, or based on the tax credits that you got when you file your paperwork, or you're actually going to find out, hey, I didn't pay enough, now I have to pay more. So that's where you got to write a check by April 15th to the government to do that, right? So again, that's an employee. If you're a business owner and you're doing this, right, a lot of the accountants, a lot of people are going to tell you, let's get you as close to zero as possible, right? And remember, you always have to be thinking is, what is my end goal? If your end goal is not to buy a property, to buy an investment property, to get qualified, then this isn't going to matter for you, right? Pay as little as you want. Now, if your end goal is to qualify for a mortgage, you're going to want to pay attention to this, right? So you have a business. Every single year, you deduct everything. You go and buy toothpaste. You go on a trip. You go on a business trip. You go on a conference. You put all those expenses and you get it down to zero. And now you're showing that and you don't have to pay any taxes. Well, that's great until you have to go to one of the team members that we're going to talk about, which is your mortgage professional, right? So we'll get to that. Let's continue focusing on taxes. So remember, when you're filing your taxes, think first of all, what is my end goal, right? If you're on Instagram, if you're on Twitter, if you're on Facebook or whatever the other platforms are, right? The blue check mark, right? That's what everyone is after, right? If you're an influencer and you're trying to get a following, you're after that blue check mark. Well, your taxes, for all sets and purposes, your tax returns, the paperwork that you filed, that is your blue check mark. The IRS, that paperwork that you filed, the IRS is essentially saying this individual submitted this paperwork saying that this is how much they earn, and based on that, they filed it. And, somebody can go in, for example, a mortgage professional will go in and they'll request copies of your tax transcripts, right? So that blue check mark is saying, hey, yeah, this individual actually reported that they make $100,000. This company, here's a W-2 that says that. So it's a further step of verification, right? So think about that. If all you're trying to do is pay zero in taxes, and let me ask you this the other way around. Let's say that you had $100,000 in your pocket and you were going to lend it to somebody. And that individual was going out there and they were going to buy real estate with it and they were going to pay you interest and show real estate as a security, right? That sounds pretty good, right? Now, let's say that individual came to you and say, hey, look, I'm looking for a $100,000 loan. I make $30,000 a year, $3,000 a month or whatever. This is my plan. This is what I'm going to do. You'll probably say, okay, well, there's some risk involved, right? This individual only makes $36,000, whatever. So there's some risk, right? Now, let me ask you this. If somebody came to you and say, hey, I'm looking to buy a house and I'm going to live in it and I'm going to rent it out, but here's the paperwork that shows that I don't make any money, my money is zero, who would you lend your money to, right? And think about that. Think about that for just 1 minute. Somebody's coming to you that shows proof of some income versus somebody's coming to you and showing zero or very, very little because they wanted to pay, little in taxes. Who would you rather lend your money to, right? And this is exactly what the bank is looking at. They see you and they see your name on a piece of paper and they're saying, hey, Mr. Jones, Mr. Cruz, Mr. Smith, we're not going to lend you that money because, yeah, you have a business that does $100,000 a year, but that business doesn't make any money, right? So you wrote off all the things on your taxes. So we can't give you this loan, right? You don't qualify for this loan. So anyways, that's kind of what you want to have your mindset is this blue check mark that you're getting from the IRS. You're going to take this blue check mark and you're going to show it around to the different banks and say, hey, this is my tax return. This is how much money I've made, right? So think about that when you're filing your taxes, right? Do you want to show the most amount of money that you made and pay the legal amount of taxes that is necessary? Or do you want to say, hey, yeah, I made $100,000, but I want to pay the least amount of taxes, so get me as close to zero as possible. Are you going to get a loan if you do that, right? So now take a step back. And if you haven't filed your taxes and you still have about a month to do so, maybe what you want to do is go and meet with a mortgage professional. Now, a mortgage professional, what they're going to be able to do is they're going to look at your scenario and they're going to pull a credit report and they're going to look at your last 2 years of taxes and they might say, well, I know you still haven't filed 2022. Let me see your W-2, what you made last year, in order for me to verify some information. Now, learn how to ask questions. If I've learned anything over the last 37 years of life is the more questions you ask, the more likely you are to get what you want. Now, if you know that you want to buy a two family, a three family, a four family, these type of homes in order for you to live in one unit, rent out the other ones and live rent free forever and continue doing this hopefully over time if that's what you want, ask that question. Hey, Mr. Mortgage Professional, do you deal with borrowers that buy duplexes, threeplexes, or fourplexes as first time home buyers? If they say, hey, look, I really don't, I only work with, people that do conventional loans, well, that individual might not be the right mortgage professional for you, right? You might want to go with a different individual. And again, there's good people and there's good services all around. And I don't want to talk bad about any individuals, but there are some people that just specialize in a certain loan product and they might not be so well versed or might not be so aware of the other products or of the other things that are out there. So that being said, you just want to make sure you find the right mortgage professional that can service you. Again, get good at asking questions. So back to the taxes thing. When you go to them, one thing they'll say, well, good job. Last year, in 2021, you showed that you made $65,000. This year in 2022, looks like your W-2, you're making $75,000. So congratulations. You might want to ask them and you might want to say, hey, look, I'm going to file taxes. I still haven't done them yet. I'm going to be honest with you. I have a side hustle. I've made some money for what I'm looking to do. The house prices I've seen range from $500,000 to $600,000, so I know I'm going to be in that range. What do I need to qualify for, let's say, a $550,000 loan? And when I file my taxes, I obviously want to be as precise as possible, but, would it help me to show a little bit more income and maybe not report all the expenses that I had with my business? Or what's your opinion, right? Now, off the record, they might say, well, based on your credit score, based on your debt to income ratio with whatever the things are, by showing an extra $15,000 on income, so you're at $90,000 for the year, we could probably get you qualified for 565 on these and these scenarios. So now, knowing this information, understanding this information, guess what you're going to do? Most likely you're going to reverse engineer the process. You're going to say, hey, you know what? My mortgage broker that I actually spoke to kind of made a good point. So what I'm going to do is I'm going to file my taxes. I'm going to put that my business earned this amount of money because I have all the paperwork to prove that it actually did. But instead of writing everything off and having all these expenses, I'm gonna bite the bullet a little bit. I'm gonna pay $2,000-3,000 of taxes, and I'm gonna show that I have a little bit more income. But that's gonna allow me to qualify for the loan. Now, some people are gonna look at this video and saying, hey, you might be cheating the system or whatever. And whatever your opinion is, I don't really care, because the problem that we ran into when we were looking to scale and grow our business and buy multifamily and buy this RV park, which is where I'm at right now, and buy other assets, is because we had been writing everything off, even though we're showing, $100,000 of cash flow through multiple real estate rental portfolios, it's like it's all coming down to zero because we have, expenses, we have management fees, we have depreciation, we have emergency things that come up. Again, depreciation, there was bonus depreciation. There's a whole bunch of tactics that we've utilized in order to pay as little taxes as necessary, but it wasn't helping us on the back end of getting a loan. So what did we do this year? We restructured it a little bit in order to say, okay, well, now that we've learned for this and because we want to scale, I would rather bite the bullet and pay $5, $10, $15,000 of taxes versus paying one or two or five, and be able to qualify for larger loan products or different loan products showing some personal income. Again, this has nothing to do with business because they, at a certain scale, they look at you as an individual, right? Then after a certain scale, you as an individual doesn't matter because your portfolio is larger than what you as an individual actually makes. That's why the bank doesn't care. But in the immediate sense, you as an individual, if you're writing everything off and you're showing the taxes at zero, it's going to be harder, more difficult for you to get those loans. I'm not saying that it's not possible. I'm not saying you can't get it. I'm just saying you might have to shop multiple banks in order to do it. So again, going to your mortgage professional, that's one of the individuals that you're going to want to meet with and discuss this tax situation specifically, and ask them and just be straight up front. This is my goal. This is what I want by June, July of 2023. I still haven't filed my taxes. Based on this income that I have and based on this side hustle, Uber Eats or whatever it is, I could get a whole bunch of expenses. But what would you recommend? Would you recommend that I, maybe minimize my expenses in order to qualify? Ask the question. Some individuals, because of financing laws, because of different disclosure laws, they're going to say, look, I can't really tell you. That's something that you need to discuss with your accountant. But maybe you just phrase it in a different way. Just be like, hey, if somebody's making $80,000 a year, are they more likely to qualify for that? And maybe they'll say yes, maybe they'll say no, and maybe they'll say depends, right? But you can kind of get the general answer of what you're looking for, right? What you're looking for is, hey, is my income right now enough for me to qualify for that? Or am I gonna need a little bit to show a little bit more income to do that? Now, again, this income has to be legitimate. You have to have earned it. So, don't go out there and do stupid things like people have done, which is commit fraud and put something, just fix the paperwork. This was exactly the issue in 2008, that people were just doing paperwork in a certain way because they understood what the system would allow to do. And now, thank God, all of that has been monitored much more. So again, that's why when you file your taxes, the bank is actually going to request a tax transcript. That's one of the paperwork that you sign, and they're going to go in, they're going to verify that that's the actual amount. So like, just do shit right. Don't go in and do it half-ass. Report it right. But at the same time, if you know that you made $65,000 of income at your W-2 job, and you have a side hustle and you made 20 grand, whether you have an Airbnb or you do some sort of consulting, or you drive Uber, or whatever it is that you do, you made some other 1099 income. Don't go ahead and put all those expenses on your Schedule C, trying to lower your tax liability when you understand that you're trying to get a loan. So understand that. So this comes kind of hand in hand with, now we're going to talk about, we went into some of the reverse engineering steps on how to reverse engineer this and what you're going to want to consider when you're going to file your taxes. So now let's get into your team. So over the last couple of weeks, we've gone in and we've looked at your specific area, and we've determined whatever the house pricing is, right? And you might be looking to relocate. You might live in an area that you might have to expand a little bit. Maybe you're looking in your city and the closest thing available is at a 15-mile radius, right? 15 miles away, is it worth it for you in order to meet your goal? For some of you, it will be. For others that might have kids in a specific school district and, that's what you're stuck on, it is what it is, right? I can't help you with that. At the end of the day, what I believe is, as an individual, as a unit, as a parenting unit, if you sit down with your kids and you're like, this is what we're looking to do, and these are things that I remember growing up, some of the lessons which probably served me the best today was, I remember one time, I think I was maybe 12 or 13, my sister, she's 4 years younger than me, so she's probably 8 or 9, and my younger brother was a little too young. But I remember we actually sat down and we were going through kind of a budgeting thing and figuring out, hey, this is the goal, right? At that time, my parents were actually looking to buy a house, and we cut back on some things, and we understood that that was the goal. So, we were able to achieve that goal as a family unit. But those are some of the things, and again, I'm not a parent, so however you do stuff with your kids, that's on you. I can't give you that advice. But I think if you sit down and you're like, look, right now you're in this A school district, because we're looking to do this, we're looking to improve our financial situation and really start to do this. We're thinking of going this, but some of the effects that you as kids will have is you'll be moved to this B school district. So, it'll be temporary, but at least you'll get that. You'll see all that stuff and have that conversation. Maybe that's what it takes. And maybe as a grown up, when you have these conversations, you'll realize that kids actually understand and they can back you up, and that will maybe relieve you in some sort of way to not feel so guilty because you got your kids involved in the process, right? So again, going to your team now that you've met with this mortgage professional, go back to your tax accountant. Maybe ask them. Maybe if that's the same individual that you've been filing your taxes with for the last 10 years, you go in and say, hey, my goal this year is by the end of the year is to buy a duplex or a threeplex or a fourplex. So I've met with my mortgage professional. This is the income that I have. This year, I know the last few years we've tried to minimize my income in order to pay less taxes, but I got to be at here. What can we do so I could still show some income, but at the same time try to lower my tax liability? Is there anything you can do? And then they may come up with, your tax accountant might look at this and might say, okay, well, maybe instead of discounting whatever, for example, your car, let's say you do Uber, right? A lot of people that do Uber, they'll track mileage. And a lot of times, if you track mileage, that rate, I think it was whatever, 62 or 65 cents, that rate, if you drove however many miles, um, you know, let's say you drove 2,000 miles times 65 cents, that's 1,300 bucks. Let's say you did an oil change a couple times and a brake job one or two times. Maybe you actually deduct the actual expense, whatever that was, $200-300, which is probably what you spend out of pocket anyways, versus deducting that allowable 1,300 for what the IRS allows, right? Your tax accountant, again, this I'm not your tax professional. This is not tax advice. This is just creatively thinking of what you could do to still show some expenses that are legitimately tied to your side hustle, your side gig, but at the same time show some income. And again, same thing, if you're a self-employed individual, if all you have is a business and all you have is 1099 income or you have commission income, right? Think of that. If your end result is to get this mortgage, right? You can't keep on showing that you're only making $12,000 a year to pay zero in taxes, right? That's not helping out your mortgage scenario, right? So think of that. So the second individual that's actually going to help you is your tax professional, and maybe start asking about them. When you're having that and you're finding that, and say, hey, this year I'm thinking of buying a duplex or a threeplex. I'm going to live in one of the units and I'm going to rent out the other ones. When I make this purchase, what kind of tax benefits do I have? Or what things would you suggest from a tax point of view that I do? Is there some repairs that I should do in order to do that? You start asking them questions, and that tax professional, if they have some experience, they'll actually tell you, well, the house that you get, there might be some local incentives. There might be some state tax incentives for home ownership. I know there's different programs out there that help you with a down payment, but also on a tax perspective, there's some tax advantages in certain parts of the country where there's actually tax credits that you get for being a homeowner. So again, look at all this stuff. So that would be another individual that's on your team, right? Obviously, a real estate professional, somebody that actually does this, that mostly works with sellers and buyers that trade these type of properties, that would be a good individual to go to. You can ask them some of these questions. Again, a good professional, I think, might tell you, like, look, I'm really not. For example, in my scenario, if you came to me with this question, I would tell you right now, look, I'm not your tax accountant. There's a lot of things which might differ, but from my experience, this is what I've seen. This is how I've handled it personally. This is how some of my other clients handle. But ultimately, go and meet with your mortgage professional, your tax professional, and they'll be able to answer it much better. Wouldn't that be much better of an answer versus you asking the question and somebody just coming up to you and saying, yeah, I don't really know, just go ask Joe, the accountant, right? Like, okay, well, thanks for your help, Max. You didn't really guide me in a direction. So, having the conversations with your real estate professional and them at least being able at a basic level say, hey, you know what? I'm not an expert at this, so this isn't the answer. But in generally, this is what I've seen. But go ahead and double check with this individual. At least it gives you something to start off with, right? And do that. So, definitely the right individual will the right realtor will help you in that scenario of getting that. So, let me see if there's any questions that have come up right now on Instagram or Facebook or Twitter or YouTube. If you have any questions, go ahead and post them. I'll try to answer them as I see them. Again, this caster platform, for whatever reason, okay, nothing on Facebook. Okay, the Twitters. Oh, I got a DM on Twitter. Let's see what it says. Efron? Erfon? So the question on Twitter is, when you go to file your tax return, do you always deduct expenses from when you go to file your tax return, do you always deduct expenses from your job? Okay, if I'm looking to qualify, how much income would I need? Okay, so Efron on Twitter, the question that Efron has is, when you go to file your taxes, do you always deduct expenses that you incur on a job for materials? And if I'm going to qualify for a $365,000 loan for a duplex, how much income do I need? Okay, Efron, so what you need to do is go in your local area. Again, if you watch some of my previous videos, go back. If you're on Twitter, you can go to Instagram, the real Maxim Cruz, and there, if you go to Instagram TV, you'll see some of my videos where I show you how to identify the homes in your area. If not, you can go on YouTube, just type in Maxim Cruz, you'll see me up there, and then I talk about that. So understanding, first of all, is where the properties are and what income you're going to have there. You can go to a mortgage professional and tell them, this is the home that I'm looking to buy, 350,000. This is the rental income that I'm going to get from this home based on whatever, $1,000 a month from the upstairs unit. I make this amount of money. Do I qualify for this mortgage? So that's the first step you want to do. As far as your tax question on what expenses you can have from a job, again, I'm not a tax professional, so this is things that I've seen. But don't quote me on this. Go and check with your tax professional. To my understanding, if you have a job, there's very, very little things that you can actually deduct. I do believe things like specific equipment and specific work clothes or work environment things that you need to have that are specific for that job. Like, let's say you work for a plumbing company and you're a W-2 employee and you had to buy plumbing boots or whatever. Again, don't quote me on this. I think things like that. But again, as an employee, you're very, very limited to what you can have on expenses. So again, you're a tax professional, would really be able to answer that question much better than I did. But at least go and check that out. So, oops. Let's see. Do I have anything? Okay. YouTube. Okay, nothing on YouTube. Let me just check LinkedIn and Instagram. I can't check messages on Instagram, so if you're DMing me right now, I can't see my messages because I'm doing this live. So I'm not sure how to do that. Oh, I guess I could go on. Let me see. I guess I can go on Instagram on my computer and then do that. Okay, nothing on LinkedIn. Let's see if I got anything. Instagram has been funny because people have been DM me on Instagram. Sometimes it goes to that junk folder or whatever. So, messages. Oh, well, I figured that out. So, all right, I got a message on Instagram. Of course, it's in the request. Hey, Marty. Okay, so this guy shared something that I shared with Alex Harmozy. Okay, Carol. Carol. Okay, Carol. So I'm looking to invest into a multifamily property. I currently live in a single family. Is this something I can do? Okay. So Carol's question on Instagram, and I think I talked about this on the other day. She currently has a single family property that she bought with an FHA loan. Of course, Carol, I don't know how long ago you bought it, so that's going to depend. When you meet with your mortgage professional, what you can ask this. Hey, say, hey, I bought this home, but now I want to move to another home and I want to buy FHA. The previous home I bought, to my understanding, is if it's been at least 2 years, and there's other scenario. I think in an FHA loan, if it's been more than 2 years since you last bought with an FHA loan, you can buy another property. As long as you're going to live in that property, you can buy another property using an FHA loan. If there's been a job change and you need to move because your job, you got relocated, used to live in Phoenix, Arizona, and now you got relocated to Dallas, Texas. Let's say you bought that 6 months ago. You can go in and you can buy that property in Dallas using an FHA loan because of job relocation. So, double check with your mortgage professional what your specific scenario might be. But yes, if you currently own a single family home and you bought that with an FHA loan, with certain requirements, you can qualify with a for a duplex, a threeplex, or a fourplex for another property and buy that with an FHA loan. So, Carol, I hope that answers your question. And again, make sure to verify with your mortgage professional because I have no idea what your scenario might be. So that's the general answer. So I think that's going to wrap up this video when we talked about taxes and just some of the reverse engineering the process, and then we talked about the team. If you're watching this, make sure to DM me or send me a direct message, a private message, comment below. If you'd like for me to review something in your specific area, go ahead and post that in the comments as well, and I'll make sure we'll do a follow-up video about it. I know I still owe a couple of people some videos, but again, I've been taking care of some things here in Texas. And if you're not following me on Instagram, go and check out my Instagram stories. Tomorrow, I'll do a quick update on what ended up happening with the pool at one of the properties, the RV parks, and then some other things that we are excited happening in our personal portfolio. And really, these are the things that I will continue to really develop, right? Because I think there's a lot of information about, people telling you, think big, think bigger, and do all that stuff. But I think in a certain scenario, like you're just gonna get started with something. And for some individuals like me, I'm super left brain, super analytical, super engineer. Like it just had to mathematically make sense for me in order to take out that fear. And I still battle with some of the fears on some of the things that I do, but I've gotten better to make decisions quick and be like, okay, this is how I'm going to solve this problem. This is the next step. This is the next step. Go, right? Take action. And for some people, it's just getting this information and putting it to use, right? Yeah, sure. People tell you, yeah, go ahead and invest in this large multifamily. Shit, how the hell am I going to do that? There's certain barriers that I think you have to get through before you just go out there and go large. Some people, I guess maybe they're more right brain and they're more just go and do it and really not worry about the steps, and they'll figure it out along the way, and maybe their upbringing was different, so it just depends where you are. But again, I'm just trying to lay it out in the way that I went through it, and if this is something that's helping you, share it with somebody else. I don't really care if you subscribe or you follow or whatever the popular thing is. If this helped you, great. That's all I really care about. If this didn't help you, thanks for watching the video and helping me out with getting that one extra view. But other than that, I mean, get the information that you need, apply it, and move towards that end goal. And like I said, when I started this, I think in February of 2010 was kind of where my mindset was. Okay, I want to go buy a property, and I didn't close until December of 2018. So it took me like a year, almost 2 years of getting that. And then when I really got into the research and I really started working overtime and saving that money, putting it aside because that's the goal I wanted, like it just took time. Like that was my process. I didn't have hundreds of dollars of extra income coming in. I don't know, at that time, now that I think about it, maybe, I could have done things. There was no Uber, or there was no Uber Eats, or there was no kind of side hustle that you could kind of just drive a couple of hours or do something extra on the side. I always did something extra on the side. Like I used to do floor plans for different general contractors and do little things where I would earn, you know, maybe one week I'd get an extra 150, 300 bucks from doing little kind of engineering, architectural design stuff. But, there's things that you could do, but it's like you just got to build up on it. So, don't be afraid that this is going to take you a full year to do. And maybe somebody looks at this and be like, well, that's too slow. So, okay, if you find something else where, you can get the information for free and go and work on it and do something, in a year from now, you're living rent free forever, then go and do it, right? At the end of the day, if you get results, I'm happy for you. But what I don't want is for individuals to see this and not take action. And, a year from now, you're in the same situation or maybe even worse than where you are right now. So hopefully,